Just a few moments ago, the Federal Reserve released the latest Beige Book report on economic conditions. Bloomberg International Economic and Policy correspondent Michael McKee is standing by with details on what we learned.
Romaine, I was trying to think of an analogy for this report, and I come up with tepid bathwater. It's not too hot, not too cold, and doesn't give us a lot of direction about where we're going. Economic activity, little changed in April and early May, according to the Beige Book. Expectations for future growth deteriorated a little, though contacts largely expected further expansion in activity, it says. Consumer expenditures steady or higher in most districts. Manufacturing flat to up. Supply chain problems continuing to go away. And here's an interesting one, given the timing. Financial conditions stable or somewhat tighter in most districts. Doesn't look like a big credit crunch from the banks, at least in this report. Higher inflation and the end of COVID-19 benefits continue to stress the budgets of low and moderate income households, it says. Employment increasing in most districts, though at a slower pace than in previous reports. Overall, the labor market continued to be strong. Contacts reported difficulty finding workers, but in some areas, contacts said they were fully staffed, and some reported they were pausing hiring or reducing headcounts. As far as inflation's concerned, prices rose moderately over the reporting period, although the rate of increase slowed in many districts. So as I say, not a lot of direction from this. You got a little of this, a little of that. The June 14th meeting still an open question, although Philip Jefferson, the incoming vice chair of the Fed, suggested he's still in favor of a pause. But we've had some data today that suggested maybe they need to tighten. So, Romaine, I leave you without a firm conclusion here.